go do some Bitcoin analysis. As you all can see right here, this is a Bitcoin weekly chart. So we are starting with the weekly and then going down to the hourly and so on and so forth. All right, so this is what we call top-down analysis. I'm sure those of you who are already professional traders, you know what we are seeing here and what we're about to do. So it's called top-down analysis. So let's quickly take a look at what we have right in front of us here. Let's look at what the chart is doing and how the chart is behaving, so that we can, be able to know where the market is going. So like I said, this is the weekly chart. So we are going to quickly analyze all of this and let's see what the market is doing. All right, very quickly, right here, let me just clear up this chart completely. So we have a clean chart right now. As we can see right now, the first question is we'll be asking ourselves is, where is the price going? Right now, as we can see, Bitcoin is currently selling for $91,000. So, but we want to know, where is the market going? First thing you all need to take note of is right here, we have a liquidity draw down here, right? Pay attention very carefully. We have, this is 80,400. We have a liquidity draw down here. Okay, let me put a box around it. Let me draw it. I'll just put a POI there. Okay, so let's just call it POI, stand for point of interest. So we have a point of interest to see what price is going to do around this region. Okay, right below these two candles. These are weekly candles. Pay attention to that. So we want to know what price is going to do around this region. Then another place that we should pay attention to as well, that needs us to look out into, is here. We have this liquidity that is buried here. Mind you, this is a weekly liquidity and it's very, very important. It's very heavy. So we're going to project this as well. And if you take this backward, you discover that this is falling inside a fair value gap. This green box that you guys are seeing here right now, that's the fair value gap between this candle that happened, I think somewhere around 4th of November 2024. It is old, but as you can see, the market went up and came back and mitigated that fair value gap before we started pumping to the top. Right now, the market needs to come back and fill in this particular liquidity that was left here. Now, while we are at that, another place we should pay attention to carefully is what we have here. We have another liquidity, a very heavy one buried down here, as we all can see. Let's project that to the future and perhaps take it back. So we have this liquidity right here, okay, buried here. We can even take it up here. Okay, just make sure we cover this entire candle here, this hammer candle formed here. And when you do that, you discover that this fell into a fair value gap that is buried here. Look at it here. We have a fair value gap between this candle and this red candle here. We have a fair value gap also there, and this particular draw on liquidity is also there, even though this candle has already mitigated that particular fair value gap. However, let's keep it in check for future purposes. Here's another fair value gap, and also here's also another important region. But let's keep that aside. Let's just proceed with what we have right here in front of us. We'll come back to that some other time. So we are trying to track, to trace what price is going to do as based on what we already have right now. Now, do not forget, while we're discussing fair value gaps are what we call imbalances, and they are very important for somebody to pay attention to. So here we have another fair value gap right here, okay, between this red candle and this red candle. Okay, mind you, we're dealing with the weekly chart, so I'm going to keep this like this and then extend it here. So we have this fair value gap here, and that is what price you see right now is rushing to go and fill up. Now, while that is happening, right, mind you, the market always look for imbalances and liquidity to grab. So the market is coming down here to fill in this fair value gap and this imbalance that we have right here. Right now, one thing we need to pay attention to right now is that right from time all the way from this all the way from down here, we've been on a bullish market. As you can see, we'll be having break of structures. The market has been breaking all kinds of structure. Another one here, we have another one, another break of structure here as well, and then we broke another structure here, and then finally here before market began to nosedive. So but right here at this point here, we have a break. We have a change of character. Now the market, that means change of character. It means the market is changing dimension. We're no longer going bullish anymore. We are now turning bearish because we broke this this low right here. I'm gonna put it like this. We broke this low right here, right? We broke it at this point here, okay, on this red candle. So we broke, we broke that low, okay, right here. Now we broke it and we came down. That gives us what? The change of character. Now meaning we are going bearish. And like I said in this video, we are quickly looking for where is price going. Now we've been able to establish all this on the weekly time frame, right? Okay, let us quickly go and switch into daily time frame. Let's see what we have on the daily. Now this is the daily time frame. Mind you, if I go back to the weekly, pay attention carefully here. Back to the weekly, where this is the weekly. Pay attention. You see this one candle here, this one green candle, a blue candle that is going up, right, taking the price up, right? Pay attention to what this candle is going to look like when we switch back to the daily. As you can see, that single one candle, you can see what it has done here. It has several candles in it. Mind you, we're coming from the weekly. That means each candle here is a daily activity because we are currently on the daily time frame. It's an activity for each day. Now if you look carefully, what is this thing, what is this BTC trying to do? You discover that BTC is trying to rush and clear, okay, is trying to rush to clear this imbalance that we have here. Look at it here, this fair value gap that we have here, okay, is trying to go and clear this fair value gap. Okay, now when it clears this fair value gap, then you can expect BTC to come down and then sweep this liquidity here. I'm talking about this liquidity here, this long rope of this weak candle here. So it's coming down to come and clear it, and then, you know, have a little pullback, okay, and then finally we come down to this region here. Okay, I'm going to draw this. Let's just keep it somewhere around here. Okay, we're going to keep it somewhere here. So we're going to have Bitcoin go here right now, because what you're seeing right now guys is just inducement. So the market is trying to induce itself backward, okay, make people feel as if we're going bullish, and then it will nosedive. However, do not forget that market makers can always turn the market to become something else. So Bitcoin can actually get to this fair value gap and pierce through it, break through it, and then finally land us here. Okay, I'm talking about this order block that we have right here between this candle here, okay, and here. So I'm going to project this to the future. Okay, so Bitcoin is going to come either if this fair value gap doesn't hold. And what you're going to do, how would you know if either the fair value gap will hold or not? When Bitcoin approaches fair value gap, watch out how it's going to approach it. If it approaches this fair value gap and with a weakening candle, or when I say weakening, I mean where by the time you begin to see, okay, let me show you people an instant. Let me give you an instant. Take a look at this now. When we started going up from this region, look at it. This candle was big, this candle was big, this one was even bigger, this one was a little bit big, this one was kind of big. Then we have smaller. By the time you begin to see small candle like this, is to tell you that the strength is weakening. The strength is weakening, and we're about to turn at any moment, right? So you watch the way Bitcoin is going to approach this fair value gap. If it comes weakening, it means we are going to have a reversal. But by the time we start approaching this fair value gap and you see it with massive candles flying, then trust me, we're going to break this thing and then finally test this supply zone here, or other blockers you may want to call it. Test this zone before we turn back down. Now somebody may ask, why is it important that Bitcoin is going to turn back down? Guys, it's because it's been long overdue that we have this liquidity here left, and then we have this large liquidity here that you see, this large one here buried here, all seated and waiting. Bitcoin needs to come down and clear all of them. Okay, however, we may not have Bitcoin come down that worse to this region here, because here we are looking at $49,000, Bitcoin coming at $49,000. That is the critical situation. Okay, guys, in the market anything is possible, anything can happen. Okay, but like I said, in a worse and critical situation, that is when Bitcoin will come back to around $49,000 to clear the whole of this liquidity here. Otherwise, if we get a strong support from the buyers, I think the worst case is around this region here, as we can all see. Okay, the worst case is around this region here. We are looking at this other block here. Forget about this one buried down here. We are looking about this one because it was this one. This is the last order block that lifted the market up to that peak that we went to. I am talking about this region here. I'm going to highlight it now. Look at it here. This red candle, this one, and this candle here, and then I'll project it to the future. Okay, and that will bring us to the 75k region. Okay, as you can see here, 69 to at about $67,000. That is the region, worst case scenario that we should have anytime soon. I'm coming. Let me take that to there. Let me stretch that all the way to present day. So that is the worst case scenario we should see, and not this one of $49,000. So we should see the worst case scenario of what, $69,000 for Bitcoin. But however, if the extreme situation doesn't play out here, this is where we should stop, which is at 74,500. I've been saying this for a long time. I told you guys that if 81,000 does not hold, expect Bitcoin to crash down to 74,000, because if you look at it right here, we don't have anything in this place to hold Bitcoin. So Bitcoin can easily fall from here down to 75,000. All right, now let's continue. Let's just see how, because this is the daily, and daily is a very big chart, so a lot of things can happen before the daily candle will close. So now if you look at this daily candle and you pay attention carefully, when you look at this daily chart right here, you also see that we have a fair value gap. Okay, we have a fair value gap as well around this region here. Okay, we have a fair value gap around here. Okay, let me project to the future. So what does this mean? Now what Bitcoin can do is that in this situation right now that Bitcoin has found itself, Bitcoin can easily I need a pencil too. Bitcoin can easily from here right now at the close of market today, as you can see, the price has not been able to go beyond this region here. Okay, you can consider this to be consider this to be a strong resistance here. Bitcoin has not been able to cross above it. Yeah, it wicked above it but came back below it, and if care is not taken, this is where Bitcoin will close today, under this black line. And what is the price target at that region? 91,500. So we should see Bitcoin, perhaps Bitcoin by 12 midnight today, Bitcoin will not close above 91,500. It will be below it. Now if Bitcoin closes below it, we are likely to get another red candle for tomorrow that will likely take Bitcoin like this. From here you will see something like this. So let me pick my pencil too. You will see Bitcoin do something like this and then come into this fair value gap. Okay, fill it, then from here it will now proceed into this fair value gap here. Okay, from there it will now come down, come to this place, reverse, and then finally begins to go down. Okay, sorry about that. So so you're gonna have this situation. So before we continue going down like that, now why is this region so important? Now let's trace it. Let me show you why this region is so important. This region here, right, where I'm expecting Bitcoin to turn and start coming down. It is important because if we plot our Fibonacci, let's plot our Fibonacci from here, this recent high down here to the recent low right here. If we plot our Fibonacci here, in fact let's draw it here, extend it to the future, you discover that this level here, I'm expecting a reversal, is also close to this Fibonacci level. So Bitcoin may come into this FVG region and wick into this Fibonacci level, just throw a wick inside and come back. What is a wick? Like what this red candle did here, this rope at the top, that is a wick. Do you understand? So you can have Bitcoin wick into this sorry, undo that. So you can have Bitcoin wick into it and finally close inside this Fibonacci level before we start to nosedive backward. Now you can quickly plot a box within this place, okay, so that let's have it that this is our fib level. In fact, I'm going to delete that. Let's put, I think I have a template for fib level. Okay, look at it, fib level. So I'm going to put it here, okay, and then I'll call it fib level. Look at it here. Let me just project to the future, which is between 50% and 61% of the Fibonacci. So let's remove the Fibonacci so that it doesn't block our view. So now we have this box here, right? You can see it, right, guys? We have this box. I think I should maybe fill it up, give it a better color representation. Maybe let's try blue, and then as for the text, I can change it from 8 to maybe 14, and let's have that. Now you look at it here, this fib level. Do you understand? Now this same fib level, if you trace it back to the future, I mean back to the past, if you draw it back to the past, you see how significant it is. Look at it. We have a touch inside that level here, we had another one here, we had another one here. So this Fibonacci level has been serving as a support for us. It supported us here and we went up. We came back, it supported us, pushed us, we went up. We came down again, it supported us and pushed us back to the top. And at this region, look at this long candle here with a rope. This candle was falling, the price Bitcoin was falling, and finally when Bitcoin entered this same fib level, the Fibonacci gave us a support and pushed us back. Finally we came down after so many attempts and we broke it at this particular point. So you expect Bitcoin to come back and also maybe get a resistance. This time around, this fib level is going to serve as a resistance because it has been serving as a support. This time around is going to serve as a resistance and push us down to the bottom. Maybe not ground zero, but down to this region here that I'm talking about, right? 81, then from 81 down to 74.5. Okay, so this is what we have on the daily chart, and if we switch to 4 hour, the hourly chart, we can also see let me zoom in so that you guys will see the full chart and everything. So right here, as you all can see, we still have this fair value gap. Look at it, this green has appeared. We still have this fair value gap, which I told you people that by the end of today we should see Bitcoin not close above 91,500. Bitcoin should close below 91,500, and then that will give us a retracement down into this fair value gap region right here, which I've already drawn with this red line. Anyhow, do you understand? We should have Bitcoin come down here, because if you look at this red candle here already, this is an inverted hammer. Okay, so we already have that there that is forming, which is a bullish pattern. I'm sorry, a bearish pattern. Excuse me, which is already a bearish pattern, and that is going to drag us down here. So we should have Bitcoin coming down around 88. Let's just say 88,000 to around 89,000. So from 89,000 down to 88,000, we should see Bitcoin coming down there by tomorrow or before Friday or thereabout. Bitcoin should come into that region and then, test that region before Bitcoin can go up. And wherever, even though Bitcoin is going up, mind you, whatever up that Bitcoin is going to, it will not go beyond this region right now, this fib region, which I've already drawn and showed you people. And I'm talking about the 96,000 to at about what we have here to at about 100,000 region. So have Bitcoin go around that region. Okay, but for now, it will be nice to have Bitcoin come back and mitigate this fair value gap here before we proceed. And I can say Bitcoin is already showing signs of doing that, but you never can tell what the market makers will do. Remember that today is Thanksgiving Day in the US. That means it's a public holiday in America. So institutional money is not currently in the market right now as we speak. So you can see the market has just been stagnating since. No much movement in the market. Everything is just stagnant. Okay, the US is the world #1 economy, and when they go to sleep, the market also will sleep. So right now they are sleeping because they have Thanksgiving, which is a public holiday in America. Everybody's going for Thanksgiving in the US. Mind you, this is November, the end of the year, right? Second to the last month of the year. So it's time for you to go and thank God for keeping you alive and blessing you from January to this point in time. So that's what the Americans are doing right now. And because of that, the market has been stagnant. Look at it. This is 4 hour rejected here. Another 4 hour rejected on this line. Another 4 hour, this red one rejected on this black line. Then this other red, another 4 hours rejected on this black line. Here is another one, this current one right now that is currently on right now, also being rejected from that particular line. And that line, if you look at it, is a very strong line because it has also served as a support before, rejecting this red candle, also supporting this blue candle right here. So it's a very, very important line and all that. So we should expect Bitcoin from here to correct back into this fair value gap, except if tomorrow after the US public holiday today, and maybe market makers decide to come inside and just manipulate the market, they can ignore this fair value gap and push us straight into this particular one here. Then finally the market will crash down into this region. While crashing down, it automatically fill all this gap and inefficiencies that we have right here. Okay, so guys, this is what I'm seeing in the market right now, and at this point in time, I'm going to say I would advise that you stay out of Bitcoin right now and wait for Bitcoin to either come back and retest this fair value gap right here, mitigate this fair value gap, or from this region close above this black line that I've drawn here. And this black line is exactly at around 91,550. So if you see Bitcoin close above, let's just say $91,600, if Bitcoin closes above $91,600, then you can put a bullish, you can go long and long Bitcoin up to this particular region of $96,000 to $100,000 region. Okay, so guys, it's Obicrypto. I hope to see you guys in the next one. This video is for the VIPs. See you guys in the next one. Obicrypto, over and out.
This is not a financial advice. Do your own research.
Obicrypto, way money they grow. No good don't make you savvy road. Every update, it makes sense. Crypto knowledge, not your main flex.